Hi everyone, and welcome to the Octa live trading session. My name is Ambrose Ebuka, and before I go into the details of today's live trading session, go ahead and let me know if you can hear me right now, and let me know in the chat if you guys can hear me, and we can proceed to today's trading session. Let me know in the chat if you guys can hear me clearly. All right. Once again, welcome to Octa's live trading session. I'm Ambrose, and you can also go ahead to tell me your name and where you're watching me from in the comments. Today, we're going to look at some important things that include some of the ways that you can analyze the markets, look at the news, fundamental analysis before opening an order, some of the methods that I use to open and close orders in real time that you can also adapt and learn and use in your own trading activities, some of the steps that I use to trade the market, and would have a section where I answer your questions. Now, in the meantime, or in the course of this trading session, if you have any currency pair or instrument that you want me to analyze, you can always type them down in the chat. I'll constantly check the chat to see if you guys have questions, and if you have, these are your favorite currencies or instruments that you would want me to analyze. It's the second trading day of the week if we're calculating based on the Forex calendar. Second trading day, and I hope you guys are having an amazing trading day. Don't forget that you can also trade digital currencies with Octa during the weekend. There are no limits to the instruments you can trade with Octa. All right, I'm going to look at the chart right now and see who we have. Dayo from Lagos, Nigeria. Welcome, Dayo. Ikura is watching. I hope I pronounced that correctly. Is watching from Makodi. Emmanuel from Nigeria. Sobekwa from South Africa. Midhun from India. Revasto watching from Kenya. Welcome, guys. Welcome every one of you. Again, we're going to do some analysis, look at some of the economic events that we've had, and go to the charts, do some analysis, and look out for areas where we can potentially execute trades in the Forex market. And today we've had a few high impact economic events. One way you can check these economic events is to use the Octa economic calendar. And to get there, you just go under the menu, you come to analysis and education, and you come down here to economic calendar and just click on it. And by default, it's probably going to be at coordinated universal time. So you would want to change this to your time zone. And the reason for this is so that the economic events are released in your time zone. So you don't wait for an event that would be released by 10, but because you're in the wrong time zone, you start expecting the result by 12, right? And then you miss out on the report. And another thing that you can do, and this is mostly for beginner traders, is to also include medium and low impact events just for the knowledge. You can also check some of these boxes so you can get the reports on these countries, and obviously these reports would have an impact on the domestic currency of that country. All right, so beginner traders, take note, include low impact and medium impact events so that you can stay updated with the trends, with market events, and just generally for the knowledge. All right, but I'll stick to high impact events. And again, guys, if you have questions or any pair you want me to analyze, let me know in the chats, and I'll check constantly to see if you guys have any questions, and I'll answer all your questions. So today we've had, well, one of the first high impact events we had was the monetary policy statements from the RBA. Now, if you don't know what the RBA is, it's the Reserve Bank of Australia. I'm just going to give you guys a brief introduction to the bank and also what these economic events mean. So the Reserve Bank of Australia is Australia's central bank that is responsible for setting monetary policy, and the goal for this is to achieve full employment, stable prices, and generally for the economic growth of the country. Right now we have RBA. Give me a second, guys. Mute. We have RBA monetary policy statement, and this is a comprehensive report that is released quarterly by the Reserve Bank of Australia. Now, what does it do? It provides us an overview of the current state of the Australian economy. This includes inflation, growth prospects, and the stance on monetary policy. Now, as traders, we analyze this statement to measure the view of the Central Bank of Australia, which is RBA. We need to understand their view on economic conditions and if there are any potential shifts in monetary policy. Again, to understand every report that you find here on Octa's economic calendar, you can always click on the report and you'd have a detailed explanation that includes what you should look out for. Just like right here, you can see in the last sentence, usually at the last sentence, Octa provides what you should look out for. And here you can see a hawkish view is considered bullish for the Australian dollar, whereas a dovish view is considered bearish. We also had RBA rate statement. Now, if you don't know what that is as well, this is also released alongside the RBA's decision on the official cash rate. Now, the statement or the rate statement gives us a detailed commentary on the factors that are influencing this decision, like inflation, global economic conditions, employment, and domestic economic trends. So we want to pay attention to this, and most importantly, this as well, which is the RBA interest rate decision. This is the general or the announcement of the decision of the Australian Central Bank, which is the RBA. Always take note of this abbreviation, guys, because in some articles and some, reports, it will just be abbreviated like by this RBA, right? So you just know that that's the Reserve Bank of Australia. So the interest rate decision is the announcement of the RBA's decision on whether to change or maintain or adjust the official cash rate. Now, if you look at this report, you would see that we have three main results. We have the previous, we have the forecast, and we have the actual, right? Now, what is common in these three reports? Can someone let me know in the chat? What's common in these three reports? We have the previous, and this is the result. We have the forecast, it's the result, and we have the actual. So let me know in the chat, what is common? What do you find similar in these three reports? So you can see that at the end of the meeting today, the board of the Reserve Bank of Australia chose to keep the official cash rate at 4.35, which you can, I think someone said, unchanged decision. Exactly. So you can see that it wasn't changed, it wasn't increased, it wasn't decreased. Now, this is one of the reports that we've been expecting for a very long time on the Australian Central Bank, because for 4 months now, the reports or the result on the interest rate decision has been unchanged. The last time it was changed was in November, where it was increased by 25 basis points. Now, what we understood, or what I understood from the information today, is that yes, the inflation in Australia is going down, but it's not going down as quickly as we thought it would, right? According to the board, it's still very high. And I'm going to go over to the charts, after we review this economic calendar, and show you guys the initial reaction of the Australian dollar to these reports, right? So now you can see that we're expecting for 4 months, right? We've been expecting this report, and the decision was unchanged. Inflation is still going down, but not as quickly as, we expected. At the end of the day, it's not entirely a positive report, right? It's leaning more to the negative side for the Australian dollar, right? So I'll just go over to the chart when we're done here on the Octa economic calendar, and I'll show you guys the reaction of the Australian dollar. Thank you, Ikure. I don't know if I pronounced it correctly again, for your response, which was obviously correct. And here we have the RBA press conference. So after the release of the interest rate decision, the governor of the Reserve Bank of Australia holds a press conference to provide further information into the decision and, you know, answer some questions from the media. And yeah, as traders, we also pay close attention to or monitor the governor's remarks, so if to find clues or to find, you know, some tips that we can get about the central bank's future stance on the economic outlook. And here we also have retail sales year over year. Okay, you said I'm pronouncing it correctly. Perfect. We also have retail sales that impacts the euro. And again, if you don't know what retail sales is, it's the year over year, just like you see YOY, is the year over year change in the total value of retail sales over a specific period. Now, for traders and, you know, investors generally, it's a key economic indicator that we use to measure the growth or the contraction of consumer spending in an economy. And as you can see right now, generally a high reading is seen as bullish for the euro, while a low reading is seen as bearish. Obviously, we got a high reading, and we're also going to look at the chart and see how this would impact the euro. And finally, on the economic calendar today, we have Victory in Europe Day. Now, remember guys, this is just high impact events. That's why it's a bit short. If I include medium and low impact events, you guys would see that a lot more reports would be added, as you can see. But just like the name goes, low impact events would bring about, you know, low volatility or no volatility to the market. But for beginner traders, you can just use that to, you know, improve your knowledge and understanding about the economic calendar and economic events. All right, so I'll just, you know, briefly explain what the Victory in Europe Day means. Obviously, you can see that the banks will be closed due to the Victory in Europe. It's also called VE Day, and it's celebrated on the 8th of May each year, right? This signifies, or it marks, the formal acceptance of Nazi Germany's surrender by the Allies, which effectively ended the World War II in Europe. And that's why we're seeing this celebration happening 7th, 8th of May each year. All right, we're going to go over to the chart right now. I know that a lot of you guys have been waiting for this moment where we just go straight to the chart. Sometimes we want to rush to trade, sometimes we want to just rush into technical analysis. But I'll tell you guys that these announcements and these reports are important for traders because monetary policy decisions by the central bank can have a significant impact on financial markets. This also extends to the CPI, the NFP, the GDP reports that you get, consumer confidence and all that. It's something that you should, you know about, something that you should be informed about, especially because this is a market driver, right? The economic stability or instability of a country would obviously reflect on the domestic currency of that country. All right, let's go straight to the chart. And I believe you guys understood the explanation we did, or I did, on the economic calendar. If you understood that analysis, the fundamental analysis and the explanation, let me know in the chat. Let me know in the chat or in the comment section if you understood the analysis, the fundamental analysis. So Ikure is asking, what would have happened if the rate was below forecast? So I showed you guys that when you look at this report, each of these reports, right, you can click on it, and usually at the last sentence, you'd see Octa provides you, what to look out for, regardless of the reports, right? If it's a positive or negative report, you can always make a profit, regardless of where the market goes, regardless of whichever or however the report turns out to be. Now you can see here, likewise, Okay. Yeah. If the RBA is hawkish about the inflationary outlook of the economy and raises the interest rate, it is usually bullish for the Australian dollar, right? If you have an increased interest rates, it's usually bullish for the Australian dollar. If the RBA has a dovish view on the Australian economy and keeps the interest rates unchanged or cuts them, it is seen as bearish for AUD. Now, even before reading this, I told you guys that the interest rates were unchanged, right? But we also we're able to make out that the inflation is obviously going down, but it's moving, or it's going down at a slow rate than we expected, which is not an entirely positive news. It's not also entirely negative, but it's leaning more to the negative side than the positive side, right? So obviously what's going to happen to the chart, we're going to see the Australian dollar decline a little bit, which I'm also going to show you guys right now. But for the person that asked, I hope you understand now what would have happened if the rates were to be dropped or the rates were to be increased, and also what would have happened if the rates are unchanged. All right. So before I look at the dollar index, I just want to quickly show you guys. So just go to Australian dollar and show you guys what happened at 6 a.m. today when we had the reports being released. So you guys can see, if you look down here, you'd see it's Tuesday, 7th May. You can see the time, and you can see that at the time that this news was released, the Australian dollar market spiked down a bit in reaction to that news. I'm also going to show you guys AUD/JPY as well, and you guys would also be able to see the spike, as you can see from here. Boom, boom, to the downside, right? Initial reaction. One of the ways that you can trade fundamental reports or economic reports is, I prefer to trade after the news, but there are still strategies that you can use, which are like pending orders for hedging strategies that you can use for fundamental analysis, where you use buy stop and sell stop, and whichever one activates, then you monitor that trade and close in profits. And if you did something like that here, then obviously sell stop activated, close the buy stop, use a trailing stop to follow your sell stop order and close in profit. Also a good strategy, but it has to be effectively modified for the strategy to work out perfectly for you, because what we saw here was a spark to the downside, and what happened? We saw a correction or a retracement to the top side as well. All right, I'm going to start with the dollar. One of the reasons I like analyzing with the dollar first is because most of the currency pairs that I trade are paired with the US dollar, and these are major currency pairs, right? Like GBPUSD, Euro USD, gold. You know, these are currencies that are paired with the dollar. So it's important that I look at the dollar chart and understand what's going on with the dollar. And the idea, I'm going to come to this framework, which are the steps to trading later, but the idea of going to the higher time frames is to look at a bigger picture of the market. And it doesn't really matter your trading style, right? You could still be a scalper. Maybe you don't go to the monthly, but higher time frames like the daily and the weekly time frames are still good to create that sense of awareness of what direction are you trading. Are you trading with the market, or are you trading against the market? All right, so just create that awareness. If you decide to trade with the market, you have more potential of making a profit. If you're trading with the trend, if you're trading against the trend, you can still make a profit, but you know that because you have that awareness, now you know that it's going to be more of a temporal move until you see the market bend completely, give you a reversal signs or reversal patterns, and then you can be a bit certain that, you know, the market is going to reverse. But until then, in a trending market, if you're trading against the trend, then you're looking at short-term reversal, short-term gains, and, you know, temporal moves in the market, right? So for this month, I mean, the month just started. We're about 7 days into the new month, but you can clearly see that we opened bearish. We are currently bearish in May, trading below this significant level, and obviously you guys can see why this is a key level for us. You can see how many times we made retests. There was a fake out here, came back down, couldn't sustain a break above, retest here again, and also we're seeing the rejection this month as dollar seems to be declining from this level, right? So currently the dollar is bearish. I'm going to go to the lower time frames as well and show you guys what I see. And if you're a bit confused about these lines, I'm going to go ahead and explain after I talk about the dollar, and everything is just going to make sense to you. So just give me 5 minutes. All right. So you can see clearly that we made a retest at this significant level here, and you can see that we couldn't sustain a break above it, and the market, or the dollar market, has pushed back down into this previous resistance that has now served as support, and we have a nice bounce here. And if you're familiar with, you know, zone trading, which is what I use, at key levels you can either have a bounce or a retest. Now sometimes you get consolidations at a key level, but at the end of the day there is always going to be a bounce or a retest at that key level. Let me show you guys what I mean. We have key levels like this. You see all these lines, key levels. Some of them are minor levels, some are major levels, and you can see that I indicate the minor ones with the lines, the major ones with the zones. And you can see what happened here. Like I told you guys, when you get to a key level, it's either a break or a bounce. We can consolidate for a while, like you can see here, and what happened? We bounced and pushed back down. All right, can you guys see that? I know some of you guys also call this a bounce as well, but we can't say for sure because we're not seeing any sustained push to the upside. This is a zone that we need to pay attention to on the dollar market. I'm going to change the color of this so that you guys can see clearly what I'm trying to talk about. Let me increase this as well. Okay. I think I also need to change this green. Okay. Now, why is this entire zone important for us, right? We're looking at either a breakout of this resistance that is very strong. We can trace this resistance all the way back to March, right? If I also extend it, you see that there are also market reactions here before the breakout. Tried to retest, tried again to retest, broke out, couldn't sustain the break, came back down to retest. So this is clearly a strong resistance point for us, which I believe if the dollar breaks above and sustains that break, then we'll be rallying up to the next key level, which would be this zone. And that's for the resistance. For this support area that we have down here, why is it important to us? If we have a break below this support, it's also going to be a break below the 200 period moving average on the daily time frame on the dollar index. If that break is sustained, we're going to see the dollar index head all the way down to this trend line and this key level as well. So for now, yes, the dollar is declining, but obviously we have to see a sustained break below this significant level before we can start to trade or sell the dollar across other pairs. And if we have a break above this significant resistance level as well, then that is going to give us an indication or a strength or strong indication to go long on the dollar across major pairs as well. So I told you guys I was going to explain the framework or the steps to trading that I use. I'll just go ahead and do that now before we look at other pairs, and also just so that everything that I talked about right now makes a lot of sense to you. So first, right, these are 6 steps that I use that you can also use as well. You know, just try it out if you don't have an existing strategy or an existing framework. And even if you have, it's also good that you modify. It's all about finding, the best possible price to analyze, finding the best possible and comfortable strategy that works for you. So you can always refine your strategy to get that comfortable. First, you need to check the news, which is what we just did. The news is a major driver of the Forex market, right? These are currencies, and the things that would move the currencies are the economy. If the economy is doing great, the currency is going to do great. We have a lot of people investing in that currency, it's going to boost the value, and the currency is going to increase in value. And what happens? Buy, right? If the economy is not doing great, there's a lot of unemployment, the inflation is high. What happens? It's also going to have a negative impact on the currency. And what happens? You sell the currency, right? But it's important that you check the news to get this overall view or long-term view of the currency that you want to trade. And the second thing you want to do is, guys, you can go ahead and maybe take a screenshot of this or write it down somewhere. Second thing you want to do is to understand the market structure. So when you get an idea of what's happening economically, you don't just come into the chart. Let's say, for example, you get the report, the Australian dollar report, and you see that it's bearish for the Australian dollar, and you just go straight to the chart and you start selling, right? How sure would you be that you're selling at the best price, at a good price, where you can clearly see areas for stop loss, where you would not, get into a lot of drawdown before the market moves into your direction? The main idea for having a framework is to create a comfortable trading environment without emotions, without stress, just a simplified and very comfortable trading environment. Now, to understand the market structure, I use zone trading, right? I just use zone trading, which includes, supply and demand zones, key levels, Fibonacci key levels as well. And if you don't know what zone trading is, zone trading includes identifying specific price zones on the chart where the price is likely to react or reverse, break or bounce, right? That's what I'm talking about. And some of these zones are historical support and resistance levels, Fibonacci retracements, trend lines, or some indicators like the moving average bounce or break as well. So that's basically what I use to identify key levels. That's what I use to understand the market structure. And with understanding the market structure, you want to look at the trend. Is this an uptrend or a downtrend? You should be able to come into the markets and perceive the market. Are we going up? Are we going down? That's one of the things that you want to look out for before you start to identify supply and demand levels, which you would need to identify key levels for as well. And after identifying your key levels, the key levels are these things that you see here. I'll just go to the 4 hours because it's what I mostly use. So these are the key levels, right? These zones that you see me map out here, they are my key levels. The trend lines, I also use that as key level as well. Why? Because if you notice, whenever we got to this trend line from here, we bounced, broke out, but didn't break below this minor level that we have here. Didn't break below the 200 period moving average, so we bounced again and pushed up. All right, so key levels are important. When we go over other instruments, other assets, you would see that the market tends to move like a magnet. The market tends to react to levels it has reacted to before. It's humans that are trading the market. So most times as humans, you know that we like to repeat our actions over and over again. So some of these areas that have served as supply would most likely serve as supply again in the future, right? So identify your key levels, and that key levels, or the key levels that we've identified, would lead us to also identifying entry levels. Where do you want to enter the trade? Very important. These 6 steps are to be used before execution, right? So you're not going to identify your key level and enter the trade and start looking for your exit. No, you identify your entry point. This is where I want to enter the trade. This is where I want to exit this trade. And this is the risk management strategy that I'm going to use. This is my risk to reward ratio. And obviously, if you want to use risk to reward, it's important that you use a moderate risk to reward ratio. And what do I mean by that? When you're risking 5% to make 1% in reward, that's not moderate at all, right? But if you're risking 1% for 1% at least, and 2%, 3%, 4%, then that's moderate, right? Because now you're risking to get equal risk or even more in reward. Okay? And when you figure this out, then you can go ahead and execute your trade. Now, what is this going to do? It's going to eliminate your emotions or the rash decisions that you would make if the market is going against you, because you've already predetermined your risk on that trade. I'm going to risk 1%, 2%. If the market is going against you in a drawdown, you're not going to be very pressured because you've already identified that risk. And yeah, that's about it. But if you don't know how much you want to risk and you choose to let the amount of your drawdown determine your risk, you could be drawing down 50% and you would not even want to close the trade. All right. So very important. Let me know in the chat if you guys got the steps or the framework to trade in, and we can look at some other pairs. Let me know in the chat, guys. I'm just going to put this here. All right, so we're going to look at GBPUSD, which is the pound dollar. And again, if you look at the monthly time frame, right, you would see that I have key levels mapped out there as well. The monthly time frame, you don't really do much on the monthly, right? Trend, significant key levels. And if you have support and resistance on the monthly time frame, clear support and resistance, they hold stronger than the resistance and support on the lower time frames, right? So if market is trading at a support that you can trace all the way to the monthly time frame, it's likely to hold stronger. What I mean by hold stronger is if you get a bounce, it's going to be a solid bounce. If you get a break, it's going to be a solid break out of that resistance level on the monthly time frame, right? So just like you can see here, let me zoom in closely so you guys can see properly. So you can see this resistance that we had here previously served as support until we had the break last month. And what happened? We can see the massive rejection to the downside from this resistance level all the way down to this support that GBPUSD is holding right now. So you can see this massive rejection from the bears. So I'm going to go lower. I'll take off the 200 period moving average so you guys can see clearly. And yeah, so what was I talking about when I said key level? I'm just going to go ahead and explain to you guys what I was talking about when I said key levels are important. The market likes to move like a magnet. I'll give you guys a brief explanation on that so you guys can see what's happening. Now, remember I said when the market gets to a key level, you can consolidate fine, but there's always going to be a break or a bounce. Just like you can see here, key level consolidation, the breakout, got to the trend line, the bounce, right? Consolidation again, breakout, got to the trend line, breakout, retest, break to the downside. Now, for this market to move from this level, 12890, let me just increase that so you guys can see clearly. For this market to move from this level all the way down to this level, let me zoom out a bit, show you guys something. So for this market to move from here all the way down to here, and why are we using this level? Because if I go back, you see that we can connect this to previous areas where the market had reactions. And remember, with zone trading, you're trading at, or you're trying to identify specific price zones on a chart where the price is likely to react or reverse. Now, for you to react, it has already, if you trace to the back, you see that the market has already created an action and it's reacting to that action. So most of these lines that you see that have been extended as support and resistance lines are being connected from the left to the right. The idea of zone trading is looking at, or the objective is to look at the left, which is going to be historical price data, and using what has happened on the left to predict what would potentially happen on the right. Now, if this market is to head from here all the way down to here, it's going to respect these key levels, except there is a news or a spike from an event. It's going to respect these key levels. So I'm just going to go ahead and play that for you guys. So you can see that the market has respected this one before it broke below. You can see respect this key level. The next place is going to respect is this one because we have all the multiple retests here. This one as well because we have all the multiple retests here. As you can see, respect. Can you guys see that? It dances around a little bit before it breaks below. Respect the trend line as well. This trend line was drawn from the daily time frame. Respect this key level as well. And then break down, retest for finally coming down to boom. So you can clearly see, again, you can see it's going back up, retest here as well before it finally breaks out. But you can clearly see that at the end of the day, key levels are important, right? Especially if you're going to be using zone trading. The idea is not just to trade at every key level. You have to look at what the market does at that key level. Are we going to break? Are we going to retest? If you're ahead of the market and you anticipate a break, then you could be caught in the wrong trade if the market makes a bounce, right? So you want to see the market make that bounce or that break. And one way you can confirm that would be candlestick momentum, right? We bounced here, we moved back up, consolidate here a bit, broke out, retest here. You can see how the market is reacting to all these lines that are being connected all the way from the past. We're talking about months ago. We're tracing this back to January, December, November last year. All right, so if you're going to be using zone trading, key levels are important for your trading. And what are we seeing right now on the pound dollar market? So we're seeing that we had a successful break below the trend line that, again, I told you guys that we drew from the daily time frame. I'll go to the daily time frame and show you guys where we drew that trend line from. You can see connected from here, very significant trend line at that. We broke below, made a retest at the trend line, and that retest also aligns with this key level, and that's why we're seeing this massive push to the downside, right? Boom, to the downside, and we're seeing the market even push further down. I expect this downside push to continue if you get this break below this key level, and then we'll be headed for another retest at this zone. I'll indicate that for you guys right now. So if this bearish move is continuous, or we have a follow-up, a bearish follow-up that closes below this significant level, then I expect a rally down for a retest at this support level that we created here in April. And guys, if you have any questions, like I said, in the course of this session, you can always ask your questions in the chat, and I would be looking at the chart to answer your questions. Again, if we have a sustained bearish move on the pound dollar, and that bearish move closes below this significant level, then we're going to see the pound dollar rally all the way down to make another retest at this support zone. So for now, it wouldn't be really ideal to start placing a trade when there is no confirmation on a key level on the pound dollar. And if you're going to use a sell stop, then try to also monitor the trade, monitor the sell stop. Octa has this amazing feature on Octa Trader where you can set alerts. You don't even need to use a sell stop. You can just set an alert on your Octa Trader, and when the price gets to that level, you receive a notification. So if you don't have the Octa Trader app, after this live session, check in the description. You would see a link under Start Trading. Click on that link and get the app, create an Octa Trader account, and you can have access to these amazing features that I just mentioned. All right, I'm going to go ahead and answer your questions. If you guys have any questions, I'll check the chart right now to see if you guys have any questions, and I will answer your questions. How do you set up leverage and lot size? You do that when you want to execute a trade. So your leverage would be set up before creating your account, your lot size, or during the creation of your account, right? So as you're creating your trading account, your leverage, you see the option to set up your leverage. You can choose up to 1,000 leverage with Octa, and your lot size, you can set that up when you're executing your trade, right? Once the trade has been executed, you can't set your lot size or modify that lot size. What you can do is to close partially from that trade, right? Now, what you need to understand about leverage also is that leverage is a two-edged sword. So if you're going to be using a higher leverage, like let's say 1,000 leverage, yes, it's going to give you more opportunity to make more profits, but it's also going to expose your account to a significant amount of risk. So if you're going to be using higher leverage, make sure that you're using a conservative lot size and you're using the proper stop loss or risk management strategies. How would you know where the market is going during news time? For instance, the NFP that happened on Friday, how could we have known whether we should buy or sell? So most times you see some anticipations or some forecast for a report that can give you an idea of what to look out for, right? When you see this economist or analyst tell you this is the projections, or you can also use the Octa economic calendar. You see a forecast. Are we having more people unemployed or less people unemployed? What's the forecast? If the forecast is for more people to be unemployed, then you know what to look out for. So it doesn't necessarily mean that that's the exact report that would be released. You cannot really tell until the result has been, or until the report has been released, but it can give you an idea of what to look out for, right? Another thing you can do is to look at past reports of the NFP. What's the trend like? Have we been having more people unemployed or less people unemployed? Are we moving up or down? That can also give you an idea of what to look out for. But you can't be 100% certain until the reports have been released and you see the figures and you know if more people are unemployed or less people are unemployed. And a comfortable way to trade the news is to trade after the news has been released, right? If you try to chase the markets it's a 50-50 thing that way, because you could be in the right or you could be in the wrong. But when you're more comfortable after the market has been released, now you can see the trends clearly, you can see your zones clearly, and you control your risk, and you're more comfortable to trade that way. You're not in a rush. What should a complete beginner do? Well, Octa has amazing videos on the Octa Broker YouTube channel. If you check the playlist, you'd see videos in English, and let's see, if you're Spanish, you can also see videos in Spanish as well, and other languages if you don't just speak English. But it's versatile, and that's one of the things I love about the economic or the educational resources at Octa. You know, you can choose from whichever language you want and choose from different videos, but try to start from the basics, okay? I don't even know how to place the buy or sell. Well, to be able to place a buy or sell, you need to have a trading account. And if you have a trading account, you can create a demo account and just play around with the demo account. Get used to the demo account is free, by the way. Just get used to the trading platform and use that demo account to start learning and practicing strategies before you go to a live account when you're confident. I'll take one more question and we will wrap up. What entry time frame would you advise for a day trader? That's a good question, actually, because well, if you don't know what day traders are traders that look to close their trades within the day, right? And sometimes scalpers end up holding their trades for a day, right? So there's still that alignment with scalpers and day traders. But for a day trader, one of the entry time frame I would recommend would be the 15 minutes and the 5 minutes time frame. If you go lower than that, then I'll just say you're a scalper. Why I recommend the 15 minutes or the 5 minutes is because, yes, there's a lot of noise, but not so much noise as the 1 minute time frame, right? And the 15 minutes time frame is kind of, it keeps you in between. So you can look at the 4 hour and the daily for your analysis, your trends, your key levels. The 15 minutes still gives you momentum. It gives you noise, fine, but it also gives you momentum. And depending on the currency pair or the instruments you're trading, if you're using a 15 minutes time frame to trade gold, then the movements would also give you, you know, has the potential to give you more profit. And obviously, you know how volatile gold is. If you move, it moves wildly up and down. So if you're going to be using or trading gold, you should always keep your risk management strategy in check. So I'll recommend 15 minutes time frame for day traders. You have more you're more likely to close your trades within the day if you're using the 15 minutes time frame. If you're using anything higher than that, let's say the 4 hour time frame or the 1 hour time frame, well, for the 1 hour you can still close your trades within the day, but the chances would be lesser if you're trading low volatile currencies or at low volatile times. So yeah, 1 hour time frame also works for day traders if you're trading gold and if you're trading in a volatile session, let's say the open of the New York session. All right. All right, guys, if that will be all your questions, if you have any other questions that I haven't answered, you can always go ahead and ask your questions in the chat and I'll answer them in the next session or still answer them in the chat. Okay, thank you guys for joining me today, and I'll see you guys in the next one. Bye.